malgré eux.
Those who are keeping silent today actually are in a way complicit with the cause of a new imperialism and a new order that is trampling over the current order. And there's no peace possible here.
The return of imperialism is not only a disaster for Europe, it is also a disaster for our global peaceful order, which is the antithesis of imperialism and neo-colonialism.
The United Nations Charter and the ideals it represents are in jeopardy. We have a duty to act, and yet we are gridlocked in colossal global dysfunction.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition, everyone. I'm Francine Lacqua here in New York. We're here for UNGA. We, of course, follow geopolitics and what we heard from Vladimir Putin. Here's what's coming up on today's program. Putin announces a partial mobilization, escalating the Ukraine war. He vows to use all means necessary to defend Russia and pledges to annex occupied territories. Moment of truth. The Fed is expected to hike by 75 basis points for a third straight meeting. Nouriel aka Dr. Doom sees a long and ugly recession. Plus, nationalization. Germany will buy Fortum's majority stake in gas giant Uniper for €1.70 a share. Now, there is quite a lot going on today, so let's check on the markets. Let's get straight to what those are doing. There's a clear move to risk off Treasuries, gold, the dollar actually leading some of the gains in these haven assets after the Russian President Vladimir Putin concretely stepped up his war against Ukraine. That's rattling markets that were already bracing for a supersized rate hike from the Federal Reserve. You can see euro dollar below parity at 99.11. Brent crude, we always look at oil, although some of the mishap, or certainly what Russia was extending or hoping to do with Russia, has already in large partly priced in. We look at the 2-year yield in the U.S., but also the 10-year at 3.5299. I've looked at European stocks. Look, it's all to do with what the Fed is doing. Oil jumping as investors react to Putin's vow to use all means necessary to defend the territorial integrity of Russia. So in the hour, we'll try and figure out geopolitics. The timing, I think, of this is extremely important. This is after also President Putin met with President Xi of China. We don't know whether that's a coincidence or not. And this is also extremely important in terms of timing because there is the UN General Assembly in New York. I'm here for that. You can see the FTSE gaining some 0.4%, but the CAC down 0.3%. So the Russian President Vladimir Putin has signed an order for partial military mobilization beginning today. In a televised address to the nation, Putin said that he supports referendums in Russian-occupied Ukraine on annexation and that Russia will take necessary steps to defend its territory. Now, for more, we're joined by Bloomberg's Europe correspondent Maria Tadeo. Maria and I have, of course, to be watching speech by speech, word for word, exactly what's been happening in the UN here in New York, but also what Vladimir Putin had to say. I mean, this is doubling down on his efforts, and he's also pulling in the reserves, Maria.
Completely, Francine, and this is escalation in tone, but actually in forms and actions. Now, in terms of the measures announced today by the Russian president, he is bringing in men who are on the reserves of the Russian army, who had served in the past and could now be called in to join in on the battlefield. The Russian authorities say that they can bring in about 300,000 new men to join the fight. In a way, Francine, this does show that the special operation is not going according to plan. It also speaks to the urgency and that logistical failure last week from Russian authorities in Kharkiv, where they, of course, lost ground to the Ukrainian army. But overall, if you look at this on the bigger picture, it is clear that in the medium term, if you were hoping for a diplomatic solution out of this, you can kiss it goodbye. It really is escalation from the Russian side, particularly, Francine, where Vladimir Putin says, I will support these referendums. Of course, it's straight out of the Russian playbook. There will be a yes to join in the Russian Federation. And at that point, he said, we will do everything, all means to protect our territory. And this is not a joke. It's not a bluff.
I was going to ask, actually, so this is also a threat possibly of nuclear war. How will the West react to this?
Completely. And this is the one thing, and Francine, you know this very well, especially being in New York today. This is the one thing that Western leaders do not want to get trapped in an escalation of words. They believe that nuclear, you have to be incredibly careful and you should not use this as a political weapon. To me, of course, again, at the nuclear, or excuse me, at the EU, the United General Assembly. I would look out for the United States and President Biden, and of course reaction from the West at this point. Again, if you were hoping that there could be some diplomatic solution to this on the medium term, today this just makes it so complicated for all sides.
Maria, thank you so much. Maria Tadeo there joining us, of course, from Brussels. We heard that speech from Vladimir Putin. He certainly did not mince his words, really saying those who are trying to blackmail us with nuclear weapons should know that the wind patterns can also turn in their direction. Now we're joined by Domitila Sagramoso, Senior Lecturer in Security and Development at King's College London. She is one of the smartest but also clued in professors when it comes to the Russian strategy. Domitila, when the president of Russia threatens once again nuclear war and really puts in drafts of many more people, I think about 300,000, to try and fight this, is it an act of desperation or is this a warning sign for the West?
I think it is, in a way, a sort of a recognition that the way the war was being carried out was not really effective. I think there was shock in Russia about over the losses in Kharkiv. So Putin really was sort of backed in a corner. He either had to react and escalate, or he had to sort of find some kind of negotiated solution. I think he decided to go for sort of the escalation, the increase in the number of troops, which is one of the key weaknesses of this operation, was the lack of infantry, of manpower. So clearly Putin is sort of raising the stakes. But what I think is really important to highlight is that this is going to also probably lead to a prolongation of the war and a lot of pressure on the West by Ukraine to sort of also increase the range and the quality of the weapons and the amount of weapons that are being delivered to Ukraine. So I think we're in a... Yes.
Is this a decisive moment? Because things could escalate quite quickly from here. I know we're hearing from the EU Commission they will propose more energy measures this month. How does the West respond? And actually, is there a concern that Vladimir Putin, with this big escalation, with the speech this morning, also felt empowered by the Chinese president last week?
There are a lot of points to think about. On the nuclear question, I think what Putin is always trying to do is to scare the West, to deter the West from raising the stakes, from increasing the amount of weaponry that is delivered to Ukraine, and to sort of convince many of those who are hesitant about delivering additional weapons to think that Russia is sort of unbeatable. This myth that Russia, cannot be defeated, remembering sort of the experiences of, for example, the Second World War. So to think that, Russia will always have more resources, will always have more men, will always have the capability eventually to defeat for example, the Ukrainian armed forces. So that's the point of these sort of rhetoric around nuclear weapons. I think we need to be very cautious because the threat of retaliation is there, and Putin very well understands that if he uses nuclear weapons, the response can also include nuclear weapons from the Western side. On the question of energy, this is a very sensitive issue, and I think we should not exclude the possibility that Russia at a certain point sort of decides to cut the supply of gas to Europe for maybe a couple of weeks to put additional pressure. So this is something that, European markets and European economies must consider very carefully and try to take measures to try to address this risk. I think we know that a lot of the storage facilities have been filled up, so we are not in a very terrible.
Domitila, how much do we understand about the support of this war and the escalation from Putin's generals and also from the population at large? So we understand he could draft in about 300,000 soldiers. So this is people we understand, and I don't know whether you think differently, with military experience. What if Vladimir Putin, puts martial art in Russia? Does everybody turn against him then?
It's very interesting. If we look carefully at his speech, I mean, he talks about, calling reservists, but he says very clearly that these are people with military experience. So he's not calling on maybe those who have had the military service many years ago or only for a year. So he's really emphasizing those who are in the reserves and have substantial military experience, and also that they're going to receive the payment as if they were professional soldiers. So he's trying to sort of walk this thin line, not to create panic, because yesterday, as we know, there was a lot of concern among the population, people thinking or trying to find ways of maybe leaving Russia. He, of course, is always worried about the middle classes in the big cities and those who could sort of call, or sort of call for an end to the war. It's very interesting that a very famous Russian actress, Alla Pugacheva, posted on Instagram her opposition to the war, and he has a lot of followers. So, Putin has to be careful. He knows that there isn't a lot of support for this war and generally for full mobilization. People might be very supportive of the operation if they're not personally involved. But I think that he has taken a gamble. He has decided that this is the only way to sort of address the challenges on the terrain. And I think that really raises the stakes for the West. To what extent, for example, is now America ready to supply the famous ATACMS, which are these long-range tactical missile systems, which would hit Russia or the areas that are occupied by Russia and maybe hit Russia further afield. Now, the consideration that these sort of occupied lands and as a result of the referendum are going to become Russian territory is trying to send a message sort of not to escalate. But I think, we will also in the West be in a position to say, how are we going to respond militarily?
Domitila, thank you so much for joining us. Domitila Sagramoso there, Senior Lecturer in Security and Development at King's College London, with very clear thoughts as always. Now, coming up, investors in Europe have nowhere to hide as increased volatility, a potential for a recession, and an energy crisis reduces the appetite for risk. We have more on that story next. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, risk appetite and short supply has increased volatility, a potential for a recession, and of course an energy crisis in Europe leaves investors with nowhere to hide on the continent. All eyes will be on Jay Powell later today as traders expect another jumbo rate hike from the central bank. Now, we're joined by John Bilton, head of global multi-asset strategy at JP Morgan Asset Management, and also Bloomberg's Christine Aquino from our MLive team. Christine, very quickly, we have some very strong moves because of what's happening in Ukraine and certainly Putin stepping up in his war. But how much of the focus is on that, and how much is on focus on what the Fed will say?
Well, Francine, if you look at Treasury yields in particular, the fact that we're still staying within yesterday's ranges, we did pull back a little bit, but really not by much. That really shows you where the balance of risks lie here. Yes, Russia is important. Investors are keeping an eye on it, but ultimately there is so much of a pull that the Fed has on yields, and particularly an upward pull on yields. The fact that we're still very much closer to that 4% level on the U.S. two-year yield really shows you what is the most important catalyst today for markets, and that would be the Fed.
Christine, thanks so much. John Bilton, it's almost like President Trump is trying to up the Fed in this. Does it change at the margin their thinking if we have a real escalation in war, with money being spent, with extra weapons being sent to Ukraine?
I think ultimately the Fed are looking at inflation, and this is just a further signal that this is a long-standing conflict. Could this be escalation to de-escalate? Who knows? Ultimately, though, it keeps pressure on energy markets. It keeps pressure on costs of oil, on costs of gas, etc. And I think that's going to feed back through into persistent concern about inflation. The Fed are laser focused on inflation. We saw the print earlier in this month, and of course that's led us to a point where the Fed is looking at doing 75 basis points, and that feels exactly what they're going to do. Day-to-day fluctuations in markets are really not something I think the Fed are looking at. They're looking at the long-term goal of bringing inflation back into a tolerable range.
John, and I know, again, some of this foreign policy is very difficult to calculate or to put a finger on, but does the Fed act like a central bank in a war? So does it make them less likely to push the U.S. in a recession because of the war in Ukraine? Or do you think they still just focus on inflation?
Well, I think that, bear in mind, the Fed have two clear mandates. One of them is employment, one of them is prices. They also have a nod towards market stability. And at the moment, with employment below what they consider to be full employment in the US, but inflation still well above their target, they're going to be focused 100% on this inflation issue. And what markets do from one day to the next, I think is going to be something which is they're aware of, but it's unlikely to be something which is going to change their trajectory or indeed their guidance as we think about not just the rate move today, but what they do with their summary of economic projections.
John, why would they not do 100 basis points today? Because if you look at entrenched inflation, once you lose that spiral, then you have lost it.
Well, I think the situation is that the Fed are looking for a series of rate hikes that will bring inflation under control gradually and with a lag. They've already made significant moves upwards. This has been the fastest rate hiking cycle we've seen really since the 1990s. So, to suggest the Fed are behind the curve now probably isn't reasonable. I think what's important for the Fed today is that they are going to look to quash any idea that rates are going to go up, peak, and then begin to drift down quickly. I think they are looking to demonstrate that this is a Fed that is in the higher for longer zone, in the same way that the previous Feds have said lower for longer. And I think that's what they want to get out of markets.
So John, what does it mean that you're positioning yourself in the markets with? I know you prefer higher quality credit to equity. Is there anything in equity that you would buy?
Well, I think right now we've got to, let's look at sort of day-to-day trading. We've had, global equities down 6% since the 13th of September. It's been a very significant sort of down move. Could we get a bit of a boost if the Fed come in line with expectation? Yeah, possibly. But at the end of the day, we're still looking at an earnings downgrade cycle which has yet to play through. And so as that works its way through, I think it's very difficult to get excited about global equities. I mean, let's face it, this is the Fed not just taking away the punch bowl here, they're actually pouring the dregs down the sink. And I think equity markets and earnings within equities need to reflect that before we can get more positive.
Christine, I know you also look, of course, at lower yields and the kind of the knee-jerk reaction that the markets have had in the last 24 hours. Are there any points in terms of treasuries, but also gilts and other fixed income that you're looking for?
Well, Francine, I think what we're seeing today is quite interesting, is this bit of a divergence in the reaction in treasuries versus European bonds, particularly those German bunds, right? I think that really is where we saw the outsized reaction to the Russia escalation in markets today. And that presents some divergence opportunities for any traders out there. Of course, it'll probably be a short-term thing, but, at the moment, if there are investors looking for idiosyncratic opportunities, that could be one, this sort of divergence between potentially lower yields in Europe as a result of what we're seeing in terms of the Russia escalation versus treasury markets, which are still very much focused on what the Fed is doing despite what we're seeing in global geopolitics. So I would keep an eye on that one in particular, how this spread plays out between European yields, UK yields versus treasury yields, as that could be something that could be quite interesting, of a bit of divergence over the next few days or weeks.
John, I know you also maintain an overweight in cash. Is that to give you an ability to, I guess, go into the markets and buy something that looks cheap?
Well, there's partly that, of course, because, one thing that happens when markets come under stress is you do get dislocations. And we've seen some dislocations, indeed, come into parts of European markets, parts of higher grade credit. We're seeing, reasonably good all-in yields in the upper end of the quality spectrum, also in the shorter maturities. But, at the same time, bear in mind, cash is now an asset which is providing a return. And I think that with the Fed moving, that's going to continue to be the case. So having some level of ballast with dry powder within the portfolio is important, but also bear in mind, it's something which, for many, many years, almost a decade or more, cash was something you just didn't want to have because of the very low level of real rates. And, those days are very much behind us, we feel.
John, I know you think that the US may narrowly avoid a recession, but there's no hope of that for the UK and the EU. Is there anything that you'd be buying in the UK or the Eurozone right now?
Well, I think within Europe, you've got to be very careful around the sector mix, because at the end of the day, the biggest issues that we face within the Eurozone, of course, are around the cost of living, around the cost of gas and energy inputs. And that means that that's squeezing income statements for companies. Balance sheets are actually surprisingly good. So, parts of the financial sector, this is not the banking market that suffered the problems back in 2010 through 12. It's a much more stable market. There are also good, higher quality, more defensive sectors to be looking at. So this is not so much in our mind a world where we're looking for a big set of regional divergences. In fact, we want our risk spread reasonably widely across regions. But there are opportunities starting to open up if we can lean more into that balance sheet strength and try and avoid those places where income statement weakness is going to come through to earnings.
John, brilliant as always. John Bilton there, head of global multi-asset strategy at JP Morgan Asset Management. Of course, it's surprising from now quite a lot of people saying actually we maintain our overweight in cash, which, as John was saying, gives you the ability to get in there. Thank you as well to our Christina Kino from our MLive team. Coming up, Fed hikes loom. The central bank is expected to hike by 75 basis points for a third straight meeting. We'll have plenty more on that next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in New York for UNGA. Treasuries, gold, and the dollar leading gains in haven assets. This is after Putin stepped up his war against Ukraine. You're seeing also a bid for a lot of these defensive stocks that we're expecting the West maybe to support Ukraine even more. Thales 5.5% higher. And then also looking at Fortum. This is after Germany said it will nationalize Uniper in a pretty historic move. We'll have plenty more on the markets and the Fed. This is Bloomberg. Putin announces a partial mobilization, escalating the Ukraine war. He vows to use all means necessary to defend Russia and pledges to annex occupied territories. Moment of truth. The Fed is expected to hike by 75 basis points for a third straight meeting. Nouriel Roubini, also known as Dr. Doom, sees a long and ugly recession. Plus, nationalization. Well, Germany will buy Fortum's majority stake in gas giant Uniper for €1.70 a share. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in New York for UNGA. So we focus on the politics. We, of course, focus on foreign affairs, also impacting the markets and some of the havens. Now, let's go straight to the Bloomberg. First Word News. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. President Vladimir Putin has declared a partial mobilization and vowed to use all means necessary to defend Russian territory. The country's defense minister says 300,000 reservists would be called up, though they will not be mobilized all at once. Earlier, Donetsk and Luhansk and two other Russian-controlled regions in Ukraine said they will hold referendums on annexation within the next week. Now, Germany is to nationalize Uniper in a historic move to rescue the country's largest gas importer and avert a collapse of the country's energy sector this winter. Berlin will inject €8 billion into the utility via a capital increase at €1.70 per share. The move lifts the government's ownership to 99%. Details of a UK government cap on energy prices for business users this winter are set to be announced later today. Bloomberg understands maximum costs could be set at about 21 pence per kilowatt hour for electricity, with a discount set to last for 6 months from the 1st of October. The bailout package could cost about $40 billion and comes on top of support for household energy, which has already been announced. And European Central Bank President Christine Lagarde says borrowing costs will rise more in the months ahead. Speaking in Frankfurt, Lagarde said the ECB has taken major steps to tackle inflation. She also said more hikes are coming over the next few meetings. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Let's check on the markets. And of course, this is what we're seeing across the boards. Definitely havens advancing, euro dropping. Putin said he will step up the war. Now, this is rattling markets that were already bracing for a supersized rate hike from the Federal Reserve. I'm looking at oil jumping as well as investors. Again, actually reacting to Putin's vow to use all means necessary to defend the territorial integrity of Russia. Now, the 10-year Treasury yields slumping around 4 points to 3.52%. Similar dated German debt also dropped. If there's one thing you need to think about, of course, is the escalation point, what Putin's war means for inflation globally, and then Fed officials, of course, are about to put numbers on the pain that they've been warning of when the central bank publishes new economic projections. That will be later today. So all eyes on Jay Powell as traders expect another jumbo rate hike from the central bank. 75 basis points is expected, but a 100 basis point move cannot be ruled out as part of the Fed's efforts to stamp out inflation. Meanwhile, the Bank of Japan has spent more than 1 trillion yen, nearly $7 billion, on its fixed-rate bond purchase operations as a benchmark 10-year yield held at the upper end of the central bank's tolerance band. Now we're joined by Greg Peters. He's co-chief investment officer at PGIM Fixed Income. Greg, thank you for joining us. What a day. If you look at the havens bid and all of the uncertainty in the markets, definitely exacerbated by what we're seeing in Russia, Ukraine. What do you buy now?
Well, I think you buy caution. Honestly, there's so many moving parts. I think it's a time to, not necessarily dive in. The landscape is just changing so radically. If you think about where we were 6 months ago, a year ago, in terms of central bank rate forecasts and expectations, it's radically different today. And so there's catch up by global central banks. And I think the markets, the risk markets, are absorbing it. But I do think there's good news on the horizon. I just don't think it's necessarily right at this time.
Yes, Greg, what exactly is priced in? We know, the trajectory is basically the Fed will continue hiking, that there will be a slowdown in the economy, and yields will move on the back of it.
Yeah, so the market's pricing, over 4% now in terms of front-end rates. So the Fed, continues. I think the important shift and what the Fed really wanted to achieve pretty successfully is there were rate cuts in the market priced into next year, and some of that was a byproduct of cheap hedging. But by and large, that was something that the Fed was uncomfortable and, quite frankly, didn't make any sense. And so the new narrative and the new pricing in the market is that rates need to move higher and they need to stay higher. Whereas just a month ago, it was, yeah, rates are moving higher, but they're coming back down. And so I think that repricing has a real important implication for risk markets.
But Greg, are you surprised at, not some of the repricing that we've seen so far, but how fast it happens? And does it mean that we could see a lot more volatility, a kind of zigzagging or whipsawing that we've seen?
Yeah, it's continuation of volatility. So we've seen heightened vol in fixed income all of last year into this year. Quite frankly, we were expecting vol to subside this year, as the typical pattern is once the Fed and central banks start moving, volatility starts to come down. But the fact that they're so far behind the curve and they removed forward guidance and they're telling you that they're data dependent means that vol is here to stay. So I think this is the world that we live in. It's central bank volatility and geopolitical volatility.
What makes you worried the most? Is there something that the markets misunderstand right now that could lead to a violent correction?
So what challenge I think we all have, and Fed and central bankers have that same challenge, is really trying to understand inflation, right? So inflation is really difficult to forecast, quite tricky in fact. So getting your hands around the path of inflation is really the challenge. And so, central banks have to be responsive to that inflation dynamic. So I think what you're seeing and the concern around central banks and investors is that it's much more broad-based, much more global than initially believed and perceived. And so I think it's really about inflation. That's the risk in the market, and that's what the Fed is fighting.
Greg, what are you buying and selling right now then?
Yeah, so we're actually seeing opportunities in fixed income, actually. So there's a lot of moves in the, Fed moves in the front end of the curve. I think that's starting to become quite interesting. I think the more liquid part of fixed income repriced early. So for example, structured products is an area that we find really quite interesting, kind of short duration, high yield. We're actually seeing more value in European corporates, even with the challenges ahead, than U.S. corporates, just given kind of the pricing differentials. So we're actually seeing relative value. It's just not this waving in type of beta environment.
So what you're talking about in Europe, is this industry dependent or is it specific companies?
Well, so it's more specific companies, but we have the luxury of seeing the same company that issue in euros and dollars, and so the prices are really quite different in euros and dollars. So it could be the same company, a U.S.-based company, in fact, that trades dramatically cheaper in Europe, and that's the opportunity that I see. So the dislocation, the segmentation has really kind of created these unique alpha opportunities.
Greg, but I guess if you get them wrong, then you have more to lose, right? So do you adjust those kind of portfolios on calls on a shorter horizon than you used to in the past?
Yeah, so I don't know if you have more to lose necessarily, because you actually, at the end of the day, own the same assets in the company. You just own it in a different format. So I think that's kind of the misperception by the segmented marketplace. But yeah, what we're worried about, broadly speaking, is global recession, and what does that mean for asset values? What does that mean for defaults? And what does that mean for recovery? So risk is on the rise. And so pricing, I think, will continue to kind of move to reflect those risks.
Greg, the terminal rate, we understand, is around 4%. What if we were wrong because of the escalation in Ukraine?
Meaning that inflation continues to persist.
More aggressively,
I think I think that's kind of in the price. It's hard to tell. I mean, we're much closer to the end than where we were, to state the obvious. So at 4%, we're getting to a place where how much more does the Fed, in this case, have to do? That's a very different narrative than where we were, I don't know, 6 months ago, when it was below 2% and investors were thinking the Fed was done. So I think we're approaching the point of peak hawkishness. We're just not quite there yet.
We heard from a former NPC policy member. He's Danny Blanchflower. He criticized the Prime Minister of the UK and basically says, just short the pound from here. You're in London, Greg. We're trying to figure out what this new administration under Liz Truss really wants to put in place. Would you short UK assets right now?
Yeah, so I think the plan and the policy is a struggle from a financial perspective. So I still see downside in sterling. So I do think kind of the combination of much more spending and, let's say, proposed tax cuts is not great for UK assets, not great for sterling. So yeah, I think directionally that's quite right. And unfortunately, I think the UK is kind of stuck here a little bit, and I think the pound is going to continue to reflect that.
But this is because her policies are in disarray, or how much does it have to do, because of the global context?
Well, it's a combination of many factors, right? So there's still this, trade dealing. You just saw, the conversation with Biden. So I still think, the hangover of Brexit. I think the global situation clearly is not helping. I think politics. What we're finding is that politics increasingly matters from a pricing perspective. So it's not just one aspect, but you put it all together. And it doesn't look great necessarily.
Greg, a final question. In a scenario where the Fed keeps going, what happens to the 60-40 portfolio scenario?
So the good news is that actually fixed income actually gets more attractive. And the challenge that we had, 2 years ago was when the 10-year was at 50 basis points and credit spreads were, at really tight levels, that opportunity set was really quite slim. With yields much higher, with spreads wider, I think we're in a much better place. I think 60-40, much better place. I think fixed income has been suffering this path-destination problem. And the path is rocky, but the destination is going to be a far better place than where we were a year and a half ago.
Greg, I know we're jumping around, but I also need to ask you about bunds. Do you think they're still overpriced, given how hawkish the ECB has been?
I think there's scope for that to sell off as well. So it's been also quite volatile in the European markets. I think what the bund market is trying to reflect is that balance between inflation and growth. So Germany is, very much, center of the storm here, and so I think that balance makes it really difficult. But yeah, kind of on the margin, I do think there's more room for yields to move higher in bunds.
Greg, thank you so much for all of course, the insight. Greg Peters, their co-chief investment officer at PGIM Fixed Income. Now, we'll have plenty more, of course, on the markets. Also, Fortum shares rise after Germany said it will buy all of the Finnish company's stock in troubled energy giant Uniper. So we have plenty more on that story next. This is Bloomberg.
We have just seen the situation with Uniper, and there might be more of this because in view of the incredibly high energy prices, which cannot be passed on to the consumers, so the states must come in. This is probably something we will see for a while. But this makes it even more important to draw the consequences out of this. And this means we need to continue with resolve on the energetic transformation in Europe and in the world, because otherwise we'll leave the weapon in the hand of Mr. Putin.
Well, that was the European Investment Bank President Werner Hoyer speaking to Bloomberg about Germany's historic move to nationalize gas giant Uniper, a move sparked by the global energy crisis and the war in Ukraine. Now, for more on this, we're joined by Bloomberg's Chad Thomas in Berlin. Chad, great to speak to you as always. This is huge. We've been talking about a potential bailout of Uniper for a while. Why now?
Well, Francine, in many ways, this was inevitable after Russia shut off the gas to Germany. Uniper was the biggest user of Russian gas. And so we were told they were losing about 100 million euros per day. And so Germany ultimately decided they needed to step in. They've taken control of Uniper. And to Werner Hoyer's point, we hear that Germany is looking at other troubled companies in the energy sector. So in many ways, this is probably the beginning of many more moves by the German government to come as this crisis unfolds.
So what's been the reaction in Germany?
Well, the German public is obviously very concerned about the energy security here, and there's also something else playing out here, and that is a discussion about a gas levy. The German government is looking at putting in place a levy that consumers will have to pay. So not only will people be paying for this nationalization, of course, through their taxes, but their energy bill is likely to go up significantly as well. So there's been a significant amount of public backlash over all of these moves that the German government is taking at the moment to secure energy in the country.
So, Chad, what's the next timeline we should be watching out for?
Well, we hear that they're likely to move on some of these other companies in the coming days and weeks. The situation is very urgent. Of course, the Uniper deal was super complicated because it also involved the Finnish government. The main shareholder in Uniper was a Finnish company. And so they wanted to move first on Uniper and then look at some of the other parts of the sector that they feel they may have to step in on as well.
Chad, I mean, there's so much, of course, at stake, also with this escalation from Vladimir Putin, which some say, look, this is a sign of desperation. Of course, this also has to do with the referendums in the annexed regions, because once they're from Russia, he can defend them, by nuclear force, which is why he's drafting in a lot of these soldiers. I mean, will that dominate the news in Germany for the next couple of weeks because of the proximity to Russia?
Well, I think it certainly will dominate the news cycle here. People obviously are very concerned about what they see playing out. Of course, Chancellor Scholz right now, he's in New York. He delivered an address to the UN General Assembly last night. Some really forceful words for Russia and for Putin from that address by the Chancellor. And so we expect to hear more from him on this topic when he returns back to Germany at the end of this week.
Thank you so much, our Chad Thomas there in Berlin. Now, coming up, Western leaders, of course, are at the UN General Assembly. They accuse Russia of modern-day imperialism. More on that story next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in New York. This is where the UN General Assembly is happening, and of course a lot of focus on foreign policy because of the escalation in the war in Ukraine by Vladimir Putin. He gave a speech about 2 hours ago. Now, NATO Secretary General says Russia's plan to hold referenda in 4 territories in Ukraine and formally annex them does not have any legitimacy. Well, Jens Stoltenberg spoke to our Anne-Marie Hordern here at the United Nations.
Such sham votes, referendums, do not have any legitimacy, and therefore they don't change the nature of the conflict. This remains a war of aggression by Russia against the independent sovereign nation in Europe, Ukraine, and this will only further worsen the situation, and therefore we need to provide more support to Ukraine.
Meanwhile, Western leaders told the UN General Assembly in New York that Russia's invasion of Ukraine harked back to an age of imperialism.
Ceux qui se taisent aujourd'hui servent malgré eux.
Those who are keeping silent today actually are in a way complicit with the cause of a new imperialism and a new order that is trampling over the current order. And there is no peace possible here.
The return of imperialism is not only a disaster for Europe, it is also a disaster for our global peaceful order, which is the antithesis of imperialism and neocolonialism.
The United Nations Charter and the ideals it represents are in jeopardy. We have a duty to act, and yet we are gridlocked in colossal global dysfunction.
Well, joining us now is Bloomberg's Maria Tadeo. Maria, in all frankness, we have all of these impassioned leaders here at the UN in New York, where I am, but Vladimir Putin does not care what they think or say. He wants to annex, of course, those territories, put troops in, because then he can probably defend them nuclearly as well.
Yes, and Francine, if you still believe there was a diplomatic way out of this, if you're Vladimir Putin and you still hoped there was a way to de-escalate and go for a diplomatic venue, then you don't do the kind of speech that he did today, where clearly he's flirting now with something that looks like nuclear warfare. This is something that Western leaders do not want to engage with. They always say no one can win a nuclear war, and this is not a political weapon or a political tool that should be politicized in that way. And then secondly, of course, this is now an escalation on the ground too, where we know that Western leaders will now feel an obligation to further help Ukraine and provide more weapons. That clip that you played from the NATO Secretary General really summed it up very well. The referenda, well, they're fake. They're a scam. We know the way this works. Russia will say a resounding yes of the population agreed to join the Russian Federation, but there is no proof of that. And Ukrainians are going to fight this on the ground. Zelensky was very clear. The counteroffensive will continue.
Maria, could this be a miscalculation actually by Vladimir Putin? We understand that, of course, there could be back channels with even, China, India calling him and saying, wait, what's going on? Do we take seriously the threats of actually following through with nuclear weapons?
And Francine, to me, that is the question, and it really is the question that needs to be answered now. Is this a miscalculation from Vladimir Putin? You talked about China, you talked about India, but we also had Erdogan yesterday who said, I do not agree with the referendums, the way they're being presented, the questions that China says they have around the invasion. And also, Francine, the Russian people. There's a big difference between watching a war, like it's reality TV at home when you watch it on TV, to now being told, pack your things, you're going to fight in Ukraine with a professional army. So there could also be social pushback from Russia, and that is something that is a very risky move for Vladimir Putin himself domestically.
Maria, thanks so much. Maria Tadeo there with the very latest, of course, on Russia. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kailey Leinz in New York. Anna Edwards will be in London. We'll have a full market reaction. Of course, it's Fed Day. Treasuries, gold, the dollar jumping on haven flows after President Putin stepped up his war against Ukraine. This is Bloomberg.
We are getting into an interesting place.
Things might not be as bad as feared.
I think we're on a collision course here.
The last quarter of this year, I think it's going to be pretty ugly.
I think we're sort of stuck in this purgatory for a while.
We're going to have a very difficult winter in Europe.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Vladimir Putin vows to use all available means to protect Russia, accusing the US and allies of trying to destroy his country. He calls up 300,000 reserve troops. Investors wait on the Fed. The central bank is expected to raise interest rates today to the highest level since 2008 and forecast further increases. And a showdown today between Congress and the CEOs of the biggest consumer banks in the US. Lawmakers want to know how they're helping customers struggling with soaring prices. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Kailey, if we thought we'd have a fairly smooth, uneventful run-up to the Fed a little bit later on today, then Russia had other ideas.
Yeah, now you have to worry about geopolitical risk today, not just monetary policy risk around the Fed. So definitely a lot for investors to digest, Anna. And as for how they were digesting everything in Asia overnight, it was pretty much a down day across the board for Asian equities. The MSCI Asia Pacific Index as a whole down about 1.4%, with some underperformance coming from Hong Kong and specifically those tech stocks. Japan was lower as well, though it's less of an equity story for me and more of a bonds and foreign exchange story when it comes to the Bank of Japan. Because take a look at where the 10-year JGB yield is, about 26 basis points. Why is that a problem for the BOJ? Because they want it capped at 25 basis points. That is why they have that yield curve control, and trying to maintain it is why they announced an unscheduled bond buying operation overnight. It'll be a very interesting decision from Kuroda and the team tomorrow. The Japanese yen, while it was receiving a bit of a haven bid earlier on those Russia headlines, now essentially unchanged against the US dollar. And really broadly in Asia, it is a story of dollar strength and weakness on the part of Asian currencies, including the Chinese yuan, despite the fact that for a 20th day in a row, the PBOC set a stronger than expected fixing rate, and yet the Chinese yuan weakening once again against the dollar. We are at 7.06, Matt. That is something we have not seen going all the way back to the summer of 2020.
I'm just happy I'm still making money on my Japanese short JGB carry trade this morning. Take a look at what's going on in U.S. markets. You'll likely not see a lot of movement in risk assets like S&P futures right now. Very little changed. Of course, we tend to see traders, and I say this so often that I feel a little sick saying it again, but sit on their hands on such a big Fed decision day. You also don't see a lot of movement in the 10-year yield. In fact, it has come down. We went up to 356, 357, I think, at one point yesterday. So after we broke through 350 for the first time since 2011, that yield has continued to rise. The 2-year yield rose up to, I think, 399 at one point, but it didn't make it to 4. So we're still watching these things, but they're not doing a lot ahead of the decision as traders want to get neutral into that time. NYMEX crude is coming up $1.50 a barrel to 85.44. This will be interesting to watch with the geopolitical risk that Anna and Kailey were talking about. That obviously puts upward pressure on the oil price, and around the UNGA, you could get even more market-moving news out of this. And then the U.S. dollar index, now at 13.18. This is where traders go worldwide for safety when you've got this kind of geopolitical risk. So as a result, we are once again at an all-time high on the Bloomberg dollar index. Anna, what do you see in Europe?
Yeah, here in Europe then, Matt, we spent the last 2 hours trying to get a sense of the size, the scope, the significance of what we heard 2 hours ago from President Putin. Yes, he was talking about using any means necessary, which sounds very alarming, but then he was launching a partial mobilization, 300,000 troops or so, so not a sort of wider conscription. So the market took a while to get its head around what exactly that means in the short term. And so we saw a great deal of volatility. We did see the dollar gain, and to some extent we've held on to those moves in FX and in commodity markets, but some of the risk aversion moves we saw in stocks have been unwound a little bit. That said, this is what we're seeing in FX. So this is the holding on to those moves that I mentioned in FX. The euro sold off and money went into the dollar as a result of that geopolitical risk, seen as more elevated, I suppose, and the risks to the Eurozone economy then as more elevated. The German 10-year yield reflected that as well. So if we thought we were just talking about the Fed, now we're not, and we do see some movement in bond markets that suggested a little bit of buying of government debt, and so those yields coming off from recent highs, which adds some complication or maybe a more neutral picture in bond markets as we head towards the Fed meeting a little later on. Uniper, this stock has been incredibly volatile, and we now have finally details of the bailout, or rather the nationalization of this business. This is the biggest importer of Russian gas in Germany. They've been bailed out, bought by the Russian government, essentially bought from a Finnish company called Fortum that previously owned it. And just to prove there is other stuff going on, but it really isn't of global significance perhaps, but it will be of interest later in the week. The UK mini budget is coming, and there's talk in the newspapers about whether we might see cuts in taxes on home transactions, on house moves. That's called stamp duty, and that as a result has moved house builders higher this morning in London. Kailey.
All right, Anna, definitely something to watch over the coming days. As for what to watch on this day, Wednesday, let's take a look at the day ahead. Bank CEOs, including Jamie Dimon of JP Morgan and Brian Moynihan of Bank of America, will be testifying before a House Financial Services Committee hearing on banking accountability. Plus, President Biden delivers remarks before the 77th session of the United Nations General Assembly. The president will also meet with UK Prime Minister Liz Truss. Japanese Prime Minister Fumio Kishida rings the New York Stock Exchange closing bell and will deliver some policy remarks. And then, of course, finally, the big event of the day, the Fed rate decision comes at 2 p.m. New York time, Matt.
All right, we will be watching all of that very, very closely today. But this morning, Vladimir Putin raised the stakes in Russia's 7-month war with Ukraine. In a televised national address earlier, Putin vowed to use all means available to defend his territory. Maria Tadeo, Bloomberg's European correspondent, joins us now for more. And this has to be the most worrying part of his speech, right? Because we're all thinking of the nuclear threat, and he said he's not bluffing.
Well, he says it's not a bluff, that this is not a joke. And just to take a step back, Matt, the reason for this, of course, is that we know there are going to be a number of votes, a number of referenda that will be carried out in some regions in Ukraine. This is straight out of the Russian playbook. You put it to a vote, and then you say there was a resounding yes. 90%, 85% of the people there agreed to join the Russian Federation, and at that point it becomes part of the territory of Russia. It's at that stage that Vladimir Putin said today he will have all the rights, but also all the means to protect his country. This is not a joke. It's not a bluff. That was his take on things. But remember, this is not the first time that he floats the fact that Russia has very powerful nuclear weapons. The other issue here that we should mention from that speech this morning is that he does say we are going to need extra manpower on the front line in Ukraine. They're hoping to bring in another 300,000 men in the front line. But Matt, I have to tell you, this says that in some ways, the special operation that was supposed to be going according to plan is not going according to plan. And a lot of experts say even if you try to bring in this man, it could be months before they actually make it to Ukraine.
Okay, so we'll watch for that and how quickly they can arrive, Maria. Clearly, European governments reeling from the early stages of this war still trying to get a handle on the damage being done to European economies. I mentioned the Uniper story. I should have said that Germany, of course, has taken ownership of that business, not Russia. It's because Russia has been turning off the gas taps that Germany and that government has had to step in there. So that's been the European response to now. What about the domestic response to what we heard today, Maria? Could this backfire on Putin? What kind of domestic response do we expect his speech to receive?
Well, Anna, to me, that is the key question, because there is a big difference, and I guess we all can agree on this. If you're a Russian man, there's a huge difference between watching a war play out like it's reality TV on television. You may be proud of your country or not. You may be rooting for the Russian army or not. But then when you get called and say, pack your things, you're now going to Donetsk to go fight a professional army, then you may feel differently. So to me, the social reaction to this, the social pushback domestically, potentially, to Vladimir Putin is a key goal here. And then, of course, we need to wait and see the reaction from countries like China, India, Turkey. How do they take what they could see or interpret as escalation? When it comes to the West today, all eyes on the U.S. president. When it comes to the European Union, it's already clear. They've said they will not accept the results from the fake referendum that they call are essentially fake, phony, and that more sanctions could be to come for the people that play out in this.
All right, Bloomberg's Maria Tadeo, thank you so much. And of course, the ongoing war in Ukraine does pose an upside risk to inflation. And that is something that the Federal Reserve has to think about. It is poised to raise interest rates to the highest level since 2008 today, and it's likely to forecast that there will be further increases. For a third meeting in a row, policymakers are expected to raise rates by 75 basis points. Dennis Lockhart, former Atlanta Fed president, spoke with Bloomberg yesterday on his predictions.
I believe they'll do 75, but I cannot fully rule out 100. I can rule out 50. There is no justification for dialing back at this point. But I really think the highest probability is 75.
Michael McKee, Bloomberg International Economics and Policy Correspondent, joins us from our D.C. bureau now with more. So, Mike, 75 likely, 100 maybe. Is the question really, though, what comes after this meeting?
That's absolutely the question that everybody is going to be asking. Vladimir Putin is not around the table in Washington at the Fed, but he's certainly clouding the economic outlook. They'll do their best to provide us with their view of the path, however, after that 0.75 percentage point increase is announced. And by the way, that would be the most aggressive rate rise since the Volcker years. So the Fed is really going after it at this point. But it's the dot plot that's going to matter to the markets the most. The June dots were above market expectations, but they're way below now. So how much do 2023 and 2024 dots move up? And what's the peak going to be? We also get our first look at 2025. How long will it be before rates start to come down? Then we also get the summary of economic projections, their view of what the economy is going to look like, and that was all put together before Putin. Should lower their growth figures is the expectation. They were all below the neutral rate already, so those should go lower. The unemployment rate will be going up. How far are they willing to let it go before it gets to be too much? Inflation, how quickly will it come down? Look for those numbers to go down much more slowly. And the first time, of course, for the 2025 estimates, they won't be that accurate that far out, but it gives us an idea of what they think the path is going to be. And of course, finally, we get Jay Powell's news conference, and he's going to try to make sure there's no ambiguity. The Fed is going to stay on this path until inflation starts to come down.
Mike, do we get a sense that the commentary that goes with a 75 basis points move might have to be more hawkish to compensate for the few who expected 100 today?
I think what you'll get is something like Jay Powell in Jackson, where he stays focused on the idea that the Fed is going to raise rates, and they're probably going to raise rates aggressively, if not 75, then by 50 basis points at the next meeting or two, and not try to give markets any reason to think that the Fed will pivot. The markets are already pricing in, or still pricing in, cuts to the Fed funds rate in 2023, and he probably wants to take that off the table.
Yeah, really interesting stuff. We will be looking forward to this meeting. Mike McKee reporting live from Washington. Our special coverage of the Fed decision starts at 1:30 p.m. New York time, 6:30 p.m. in London. Now let's get to a story that has rocked Wall Street. Banks are likely to lose about $600 million after unloading debt for the buyout of Citrix Systems. Investors required significantly higher yields than the banks had promised private equity firms, Vista Equity and Elliott Investment Management, back in January. Shanali Basak, our global finance correspondent, joins us now for more. And this is especially interesting because it probably marks a milestone, at least for now, in terms of raising debt.
There was this grand hope that this deal going through would really start to open the pipelines. I spoke to a senior leader at Apollo last week who said, don't get your hopes up. And you're looking now, and the banks are still holding $6.5 billion of this debt, give or take, and they've offloaded about $8.6 billion, but at a steep discount. And that's according to Bloomberg calculations and market participants, according to people familiar with the deal, led by reporters including Paula Seligson. I mean, it is truly an amazing story.
So what, like 83, 84 cents on the dollar?
Yes, for one part of the deal. Another part of the deal, the leveraged loan, sold at a discount of 91 cents. So yes, still steep discounts, below par. And again, this is not the only deal on the pipeline. So $600 million worth of projected losses for the banks involved. About 30 or so in total were involved, but also not the only deal on the pipeline. So could it close the market for longer and impact future deals? Yes. And could it impact the banks in terms of what they have to mark as potential losses because of those mark-to-market write-downs? Also, yes.
Well, let's talk about the leaders of the banks specifically, because all those big bank CEOs are going to be testifying before Congress today on risk to the economy. We've gotten a preview of their remarks already. How fiery do we expect their exchange with lawmakers to be?
It's a great question because you have two things going on, Kailey. First, you have the banks stepping up and making their case. In the case of Jamie Dimon, that case was about the higher capital requirements that JP Morgan may face and what that could mean in terms of a tightening economic outlook. Jane Fraser talked about the economy and said it was daunting despite the worst of COVID being over. You have the head of U.S. Bancorp making a case for its acquisition of MUFG Union Bank. They're waiting regulatory approval. But remember, there are different concerns on the eyes of lawmakers Kailey, and that includes sparring views in Congress about climate change. It's concerns about the availability of financing for homes, for communities, for mortgages. You have worries about roaring inflation. You have worries about pay and worries about whether pay for branch workers are rising commensurate with what you're seeing in the broader society and relative to the investment bankers that have gotten very large pay increases in the last couple of years. So, Kailey, there are truly a lot of worries on that horizon. It is bound to be a very interesting thing to see right before the midterms, especially.
Yeah, clearly a lot to talk about on the Hill. Bloomberg Sonali Basic, thank you so much. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. And I want to begin with some of those defense stocks, which are getting a lift today because of those headlines out of Vladimir Putin regarding mobilization of Russian troops, one of them being Lockheed Martin, which is up about 3%. You're also seeing broadly a lift in the commodity space, specifically in oil, and that is giving a commensurate lift to the energy sector. The Energy Select Sector SPDR ETF, which essentially gauges how the sector as a whole is going to be performing in early hours, is up about 1.2%. One stock moving lower, though, is Micron. It was downgraded to neutral over at Mizuho with a $56 price target. That chip maker right now trading at $49.51 in pre-market trading, down about 2.5% before the bell, Anna.
Kailey, still to come on this program, we'll talk much more about the markets, what to expect from today's Fed decision with Steve Blitz, TS Lombard Chief US Economist. What is he watching out for in the rates, in the forecasts, in the guidance, well, the press conference at least, or the dots? More on Putin's call to arms. That also coming up with Elisabeth Braw, who joins us from the American Enterprise Institute, where she is Senior Fellow. Plus, Ken Griffin takes Miami, why the Citadel founder ditched Chicago for Wall Street South. More ahead. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kailey Leinz, Anna Edwards with us out of London. We are looking at a Fed rate hike that'll likely be 75 basis points today. I've got a screen here that shows the odds of a 100 basis point rate hike coming back down now to only about 18%. The odds of a 75 basis point rate hike next month, or wait, in 2 months, in November, up to 75%. So the market is betting on 75, 75, and 50, basically. This shows the odds of a 50 basis point rate hike in December at 60%. Joining us right now from Paris is Bloomberg's senior markets editor, Phil Serafino. And Phil, I didn't know whether I should kick it off with the Fed or with Vladimir Putin, because if he's going to use any means necessary, the market may be more concerned about that than Jay Powell raising rates.
Yeah, you might think that, Matt, but it was pretty surprising when those headlines moved this morning about Putin's speech. There was a bit of a blip down in the markets, and then they just stabilized very quickly. I think the rhetoric was probably not a huge surprise to a lot of traders, but people are very focused on this Fed meeting. It's really going to set the tone for the market.
Focused on the Fed meeting, Phil, and focused very much on the dots, we understand, and what they tell us about how long these interest rates are going to stay high for.
Right. I mean, the market is set up at this point now for a 75 basis point increase. If we get that, and there are some signs from Jay Powell that, you know, he's backing off a little bit on the hawkishness, that might set the market up for a relief rally. You know, the scenario that Matt just outlined there, 75, 75, 50, that seems to be baked in at this point. And there's still a glimmer of hope. I think Mike McKee mentioned it earlier that the Fed might be cutting rates next year. And so the tone that Powell gives today is going to be very important. You know, the market has come down from the mid-August peak. People have started to realize that inflation is really almost getting out of control. And the Fed may be behind the curve. Any sign that the Fed can give that, no, things are under control and we're getting towards the end of this hiking cycle, the market would welcome that.
Phil, thanks very much for the update. Bloomberg's Phil Serafino on the markets. And for more market analysis, check out MLIV Go. That's the function to use on your Bloomberg terminal. This is Bloomberg.
you up to date with news from around the world, here's the first word. The special master in the Donald Trump documents case is skeptical of some of the former president's arguments. Federal Judge Raymond Dearie pushed back on the Trump lawyers' position that they didn't need to detail any alleged declassifications of highly sensitive records. He said the Justice Department had presented evidence that several of the documents were classified. The Bank of Japan is trying to cap upward pressure on yields before a policy decision later this week. The central bank announced an unscheduled bond buying operation. BOJ Governor Kuroda has emphasized his determination to maintain rock-bottom interest rates, even though many other developed nations are increasing them. And speaking of, ECB President Christine Lagarde says borrowing costs will rise more in the months ahead. Speaking in Frankfurt, she said the ECB has taken major steps to tackle inflation, and she expects to raise interest rates further over the next several meetings. And the Federal Reserve, too, is expected to raise rates by 75 basis points today. We'll discuss that coming up with Stephen Blitz, TS Lombard Chief US Economist. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Vladimir Putin vows to use all available means to protect Russia, accusing the US and allies of trying to destroy his country. He calls up 300,000 reserve troops. Investors wait for the Fed. The central bank is expected to raise interest rates today to the highest level since 2008 and forecast further increases to come. And a showdown today between Congress and the CEOs of the biggest consumer banks in the US. Lawmakers want to know how those banks are helping customers struggling with soaring prices. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And 2.5 hours ago, Matt, we were listening to President Putin's recorded message talking about troop mobilization, talking about any means necessary, and risk assets really sold off. But to a large degree, certainly stocks have clawed back some of those losses, even if some other assets remain focused on those developments.
Yeah, absolutely. I mean, as Phil Serafino just told us, markets have stabilized pretty quickly after those Putin remarks, to the point where it looks like a pretty normal Fed day on U.S. futures. We see very little change here, so traders don't want to do very much. And we've already heard that they have cleared their shorts and cleared their long positions as well, gotten neutral in markets ahead of this decision because anything could happen. Although, really, in terms of the rate increase, everyone's betting on 75 basis points. 10-year yields are not really moving now at 354. We rose all the way up, I think, to almost 360 in yesterday's session, and the 2-year yield almost to 4%, to 399. But both have come down a little bit since then, and we're looking at, again, some stabilization here. NYMEX crude is still up, and now 86.08. This is one of those assets that I think really can be strongly affected by geopolitical events, especially out of Russia. So that's feeling the upward pressure from Putin's remarks. 86.15. This is for Texas Intermediate, but of course Brent shows very similar moves, more than 2%. And the Bloomberg US Dollar Index as well. At 13.17, we're back up to all-time highs for the dollar index, and you can see that strength if you look at, for example, the euro or the pound this morning. Kailey, what do you see in terms of the pre-market movers?
Well, you mentioned the lift we're seeing in oil prices on the back of those Russian headlines, and that is translating directly into a lift in the energy sector. Names like Marathon Oil, Occidental Petroleum, each up the better part of 2% before the bell. And also you're seeing defense stocks getting a boost here after some of that more aggressive rhetoric from Putin talking about any means necessary. Once again, we're weighing the potential of any kind of nuclear weapon possibly being used. And as a result, the likes of Lockheed and Raytheon are getting a boost. They're up 2.5% and 2.75% respectively in early hours, Anna.
Let me focus on what's going on here in Europe then, Kailey. And just as you're seeing some pre-market action in defense names, we've seen that in some of the defense names in Europe. Also, the energy names moving higher. That works to the advantage of the London market. Italy getting some of the benefit as well. And so what was a negative start to European trading, with those words of Putin, that geopolitical tension and risk ringing in the ears of investors, was turned around into a gain right now of 0.3% as we head towards another focus later, and that is the Fed. Here is where we've been hanging on to a little bit of the reaction to Putin, though. The euro was lower than this, but it still does show a little bit of weakness as a result of Putin's comments, down 0.5%, because, of course, many put together further threats to the Ukraine situation and what that does to the European economy. The German 10-year yield in focus as well. We've seen yields, of course, on the rise of late. That's been broadly, globally, very much the trend. Today, we saw something a little different just on the back of those Putin comments, a bit of bond buying coming through, yields coming down, but only at the margin. Uniper, of course, a very early victim of the tensions between Russia and the West. As Russia dialed down the amount of gas it was prepared to send to Europe, then Germany's largest importer of gas was up against it and had to pay spot prices. They've now been bailed out by the German government taking on ownership of this business now from a Finnish business called Fortum, which previously owned it. Kailey.
All right, Anna, well, let's go back to the conversation around the Federal Reserve with that decision coming up at 2 p.m. Eastern Time. Stephen Blitz, TS Lombard Chief US Economist, is joining us now on set here in New York City, up early for us on this Fed Day. The market's pricing in 75 basis points. Hawkish is where expectations are. How could the Fed possibly exceed those hawkish expectations today?
Well, they could raise 100, right?
What do you think the likelihood of that is, realistically?
Well, pretty small. I mean, I think they should do it, but they probably won't. They would have already signaled that they did the last two meetings, you know, on the weekend before if there was going to be something different. So I suspect it'll be 75, like everybody else does. It's all about the forward guidance, right? And I think it'll be a little bit less dovish in the forward guidance this time. It's an odd game that the Fed is playing right now, all central banks really, right? In that usually the funds rate is moving in the same direction as inflation. But everyone knows that inflation is going to be coming down to some level, right, as supply chains, all these things normalize. So if you think the inflation rate is going to drop down to 3%, then suddenly 3.25%, 3.5% is just fine. The message of the August CPI data is that that's a little optimistic. And that's why we went from 3.25% to 4%. And if they delay through the course of this year in getting up to a high enough funds rate, next year it'll be 5%.
Well, the market narrative, I'm not sure if it's the market narrative or the media narrative, seems to have shifted. At first, they're not doing enough. They need to fight inflation, raise rates further and faster. And now they're doing too much. They're going to kill the economy. Unemployment is going to be horrendous. I mean, why do you think that shift happened? And is it going to change the way Powell behaves?
No. And I think that, you know, how the media shifts, you guys can answer this better than I can. But I think that the
Well, we heard, for example, from Dartmouth professor Danny Blanchflower that, you know, the kind of unemployment they'll create with these rate increases is going to be worse than the kind of inflation that we're worried about now. Do you disagree?
Well, it's a good point. But that's a difficult point to argue. And the fact is that, you know, they're looking at a very high inflation rate. They're looking at an unemployment rate of 3.5, 3.7. They're looking at nominal wage growth at 7%. They're looking at for job switchers at 8.5.
Now. But policy has a 6 to 12 to 18-month lag, right?
Long and variable.
It's long and variable lags. You're right. But, you know, some years, this is a very different cycle, right? Because it's built. They're trying to reverse an asset cycle as opposed to a credit cycle. So all these other bromides are always go back to times when the Fed raised rates, it curtailed lending, curtailed borrowing, an economy running on leverage suddenly had to reverse itself. You don't have an economy running on leverage in that same way, so really you have to quash the asset side of people's balance sheets, and how far does that have to go before you really start to change behavior?
Steve, good morning to you. So you have to quash the asset side of the balance sheet. Maybe you have to quash the economy through unemployment and growth as well. I mean, what kind of tolerance for unemployment and weak growth do you think the Fed will indicate?
Well, I don't think they'll indicate a number, and that's why they've been very soft in terms of how they've been talking about this. But I think that my general feeling is that after 4.5%, the Fed will start to take notice in terms of its policies. I think that the unemployment rate is going to get up to about 5.5%, 6% before all is said and done. And it's terrible, and it's always terrible, especially for the people who are unemployed. Sometimes economists talk about these numbers in a very abstract way, but, we're talking about real people and real lives.
Yeah.
But, 5.5%, 6% is really not that bad a recession from going back to the Economist hat. And, at 4.5%, they start to take notice. But, he told us very clearly there's going to be pain.
Yeah.
And the only way in which they can slow this economy down, remember, this is the first time since the 80-82 recession where we have the inflation rate so far above the unemployment rate. It's been the other way around. And you can't get and we know that the inflation rate's going to drop back down towards the unemployment rate at some point, but the message of the August CPI is that this core inflation rate is not just going to melt away.
All right, Steve, great to have you in the studio this morning. Thanks so much for coming in and joining us. Stephen Blitz there of TS Lombard. Coming up, we are going to discuss Putin's escalation in Ukraine with Elisabeth Braw, American Enterprise Institute Senior Fellow. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, an interview with UN Special Envoy for Climate Action and Finance, Mark Carney. That's at 9:30 a.m. in New York, 2:30 p.m. in London. This is Bloomberg.
The Ukrainians aren't concentrating their soldiers and armed vehicles in big World War II style formations necessarily. They're fighting in smaller numbers. So where are you going to drop the bomb? Are you going to drop a bomb on a Ukrainian city? In which case, I think even the tentative support that Putin has from the President Xi of China and Prime Minister Modi of India, who's still buying Russian energy, I think you'd see even those guys putting out the red card and saying, I think enough is enough.
That was the view of Samir Puri, a senior fellow at the International Institute for Strategic Study, speaking to Bloomberg moments before Vladimir Putin's speech. Putin has vowed to defend Russian territory by using all means at its disposal. We just heard the guest there reflecting on what that could mean and the limitations on what that could mean. Could it mean that we're talking about including the nuclear arsenal here? Joining us now for more is Elisabeth Braw, American Enterprise Institute Senior Fellow. Elisabeth, good morning to you. Thanks for joining us. So, of course, any means necessary was the phrase that stood out to a lot of people who are trying to work out how significant these statements from President Putin might be. How did you interpret that phrase?
I think it wasn't altogether surprising that he would try to escalate, basically to frighten Ukraine and especially to frighten the West. He doesn't have very much leverage left. The main thing he has is the Russian nuclear arsenal, which is one of the two biggest ones in the world, the other one being the American nuclear arsenal. So it's something that you can always use as a threat if you can't think of anything else. And clearly at this point, he can't think of anything else because he has proven in negative terms in Ukraine that his Russia's conventional fighting force is less good than he thought and than the rest of the world thought. So it's really a sign of desperation.
I love the scene, the beginning scene in War Games, Elisabeth, the classic Matthew Broderick, Ali Sheedy film, where I guess the president orders a nuclear strike, but the actual soldiers in the silo refuse to turn the keys. Does Russia have some similar fail-safes, or could Putin just launch nukes himself?
Every country with nuclear weapons has a sort of a sequence of events that needs to happen. So it's not like Putin can turn the ignition key, as it were, just as Donald Trump couldn't turn the ignition key, as it were, when he was in charge. That was sort of a threat that friend and foes in America and abroad I think used too much. It doesn't work like that. It's a sequence that needs to happen. And that sequence includes high-ranking military officers. And even though Russia's highest-ranking military officers haven't exactly displayed independence of thought in this war, if Putin were to want to launch a nuclear attack, that's where they would say this is enough, because it would mean that Russia would be attacked back. They don't want that.
Well, on the point of people turning away from Vladimir Putin, what kind of domestic blowback could he be facing for drawing on more troops to bring into a war, physically a war that many people to this point have just been watching on television?
That's right. I think that's the key point of where we are now. The fact that the Russian population could turn away from him, and the Russian population on one hand, and senior officials on the other hand, and both for the same reason, because now Russia is being inconvenienced by this war. Until now, it has been something that was playing out in another country. They didn't have to suffer much, really, at all, apart from the Western companies that have left Russia. But if there is now going to be a partial mobilization of these 300,000 reserve officers, these are people who, these are 300,000 people who are now being massively inconvenienced. That's a large chunk of the population that will then say, this is not really a good idea anymore, this war. So those people themselves, their friends and relatives, their acquaintances and people around them, and at the top of the chain, senior military officials.
Of course, we're talking about reservists at this point, so people with military experience, but we'll wait to see whether that call-up might go further, Elisabeth. President Putin's aims, he says they have not changed in Ukraine. Clearly, all of the action, though, right now, all of the focus is on the east of the country. What do you think he would want to see out of this conflict now? Do you think he has moderated his expectations, as unacceptable as those moderated expectations might still be to Ukraine?
Yeah, it's interesting, Anna, is it not, that when Russia launched the invasion on the 24th of February, the goal was regime change. Clearly, that's not going to happen. And I think a logical or realistic calculations in Russia would now include scenarios like Russia being able to keep some territories that it has captured and kept, which is why we're seeing these referendums being announced. Sham referendums, clearly, but nevertheless referendums where the local population will inevitably vote in favor of joining Russia because these are sham referendums. And then Russia will be able to claim that it achieved a significant goal, which is the incorporation of certain key Ukrainian parts of Ukrainian land into Russia, and that could be sold as a significant gain in this war, based on which Putin could then declare that it's mission accomplished and we will retreat.
Which would be interesting in itself. Elisabeth, thank you very much. We'll see how those referenda play out and how Russia chooses to use the results. Elisabeth Braw, American Enterprise Institute Senior Fellow. Coming up on the programme, we will turn back to the States. We'll turn back to markets, betting billions on Wall Street South. Why Citadel founder Ken Griffin is all in on Miami. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz in New York and Anna Edwards in London. Tom Keene is back in New York from an extended stay in London and ready to lead our special coverage of the Fed today. So, Tom, what's your single best chart? What are you focused on
I've got about 5 best charts for this morning. I thought I'd keep it simple and look back to Anna Edwards London here as well, and it's a second derivative of pound sterling. This is called convexity among the fancy people, and all you need to know is it's like putting your foot on the Ducati, Matt. This is the acceleration of sterling down. This is back way before Brexit. Brexit with the red mark over on the left side of the screen. Down we go. And on that regression pre-Brexit from this peak of sterling 140, we've got an acceleration towards weak pound sterling.
All right, Tom. Well, on this Fed day, clearly you have lots of hours of coverage ahead of you. On your 3 hours of surveillance, who are you going to be speaking with?
With Global Wall Street, we start strong. We are thrilled to bring you to begin our coverage Dominic Constam of Mizuho. He will join us here within, I think, 9 minutes. And then on to Peter Hooper of Deutsche Bank. They were way out front on calling for recession. On the bear market, that he has absolutely nailed. Michael Wilson of Morgan Stanley later in the morning.
All right, Tom, we are looking forward to the coverage. Thanks so much for joining us. Tom Keene, Up next on Bloomberg Surveillance, I want to get now to a story that really blew me away this morning. Citadel founder Ken Griffin is the subject of today's big take after moving his family and financial empire to Miami from Chicago. The billionaire has the U.S. presidential race in his sights. Amanda Gordon here to explain after speaking with Griffin and penning this fantastic story. It's great to have you here on set. I feel like we're rewinding in some ways. The story made me so excited for Miami. Of course, other people have been concerned about it. Tell us about it.
Well, Miami is a young city, and unlike Chicago and New York, which has ages of a social structure and is more rigid, Miami is very open and decentralized. So the people that I spoke to said both that they're welcoming Ken Griffin and so excited for the opportunity, but they're also savvy. This is a young city that sees other older cities facing threats, and it is trying to be innovative and direct about taking those head on, like putting in pumps so that when the water comes over with sea level rise, the streets will empty out from flooding, very quickly. So it's a dynamic situation. The big take, though, is that Ken Griffin coming to Miami, it's different than all the migrations we've been hearing about throughout the pandemic.
With $30 billion.
Yeah, exactly. He is competitive. He has his sights set, as you said, on the presidential race, on politics. He sees being able to help Miami move forward as a step in helping America stay competitive.
Well, and he says he wants to go big there. I mean, how great is the mismatch between his expectations of what he's going to be able to do in Miami and what reality actually is?
Well, someone said to me as I was reporting the story, oh, it's like he's doing a cannonball in one of those Miami swimming pools. And I think that he's mindful of this. In my interview with him, it was clear that while he said he wants to listen and understand and not pounce and pretend to know what Miami needs, he knows that he has the wherewithal to figure it out and a staff to look at philanthropic opportunities, to look at infrastructure and education issues that are coming up, especially with widening income inequality. So I think that he feels prepared to take it on, and he's looking forward to the partnerships that he might forge.
Yeah, we're not sort of in, we're all in, he said in the interview with you, Amanda. Let me ask you, though, about where this leaves other cities in New York, because we refer to this as the Wall Street of the South, the Wall Street South. I mean, is Miami's gain New York's loss, or how should we think about that?
Well, in the next few weeks, Citadel and Citadel Securities will be filling in the tower where they are the anchor tenant at 425 Park, which is designed by Norman Foster. And I had a chance to take a look at it a couple weeks ago. It is a fantastic building with beautiful sight lines, very high ceilings. I think that Ken actually feels that this is not New York, this is not Miami versus New York versus Chicago or anything else. In fact, Citadel has more staff in New York than they do in any other city. He wants New York to succeed. He knows that young talent loves to be here. He loves the city himself and has supported things like the Museum of Natural History. So I think we'll be seeing a healthy presence for Citadel here as well as Miami.
Okay, he's supporting Miami, he's supporting New York. He doesn't mind where you are in either, as long as you're in the office. Amanda, thank you very much. Bloomberg's Amanda Gordon bringing us the latest on that big take story. A fascinating read on the Bloomberg terminal and on the website. That is it for Early Edition. More surveillance is ahead. They are, of course, building up towards that Fed decision, thinking also about the geopolitics. This is Bloomberg.